first, I'm going to tell you what risk doesn't mean. What it doesn't mean is that you're going to lose all your money, because that's what most people assume. They think that risk means that you're going to lose everything. But what it actually means is that you might lose a bit of it, or some of it, or yes, possibly all of it, but it's unlikely. The important thing to know is that risky investments, so-called risky investments like stocks and shares, for example, tend to give a good return because there's a correlation on the whole between risk and reward. On the whole, the higher the risk, the higher the reward. And conversely, the lower the risk, the lower the reward. And it's so important to understand this because for you and me, for our investing, our long-term investing, we need to get a high reward because we need our investments to outperform inflation. And the only way you can do that is by putting your money in things that are supposed to be a bit risky. If you put all your money, as a lot of people do, into savings accounts because you think they're not risky, you will definitely lose money. It won't look like you are, but in real terms, in terms of its buying power, because of inflation eating away at your money, you will lose money. So for short-term saving, perfectly fine. Put your money into a savings account for holidays, for Christmas, that sort of thing. But for long-term investing, for your retirement, for your future, for your children's future, it has to be in the so-called riskier products. And remember, you can reduce that risk easily by diversifying, by spreading your money in different products. That's how you do it.